It's just been reported all over the news that Tesla stock has finally bounced back. It's up 5.5% after snapping its longest weekly losing streak since 2021. This is all over the news. Do you believe the hype here? Is this telling you the true story? Well, let's have a quick look at Tesla versus its competition and see who really is performing badly or performing well. And I'm going to give you at the end of this video my recommendation on the stocks that I think are worth you considering. I'm not going to tell you to buy them because I can't. Otherwise, I'll get fined $400,000. Hello, my friends. Welcome to the channel. I'm the Electric Viking. My name's Sam Evans. Welcome to all the new subscribers. Welcome back, everyone else. Tesla stock soared to close up 5.5% on Friday, say the mainstream media, ending the week in the green and snapping their longest losing streak since 2021. Now, the reason for this, the media are claiming, is a reason that I don't think makes any sense. But they say it's because of news out of China, which I just reported on another video. You can check that out, where the China Passenger Car Association reported Tesla delivered 75,842 vehicles that were made in China. They weren't all delivered in China. About half of them were, I believe. That's a figure that was down 15% compared to March, but was a huge jump up from a year ago when Tesla delivered 1,500 vehicles because of the COVID pandemic the government shut down the factory. It wasn't COVID that did it. It was the government. Tesla shares have been under pressure since the electric vehicle makers disappointing. I don't think they were disappointing, but everyone else says they were. Earnings last month, where margin pressure was a concern to investors. The margin pressure stemmed from a series of price cuts that occurred in Q1 and the start of Q2. But keep in mind, all of Tesla's competitors, all of them except BYD, make a loss on their EVs. There's no margin for them. They're minus margin. So I'd say Tesla's positive margin. In my opinion, anything over a 5% margin on EVs now in this current climate is a great result. Tesla are well above that figure and well above all of their competitors, direct competitors. I mean, yeah, BYD are a direct competitor for them in Australia and China, not really anywhere else right now. Anyway, Tesla did reverse some of those price cuts just this week when they slightly raised prices in China, the US, and many other countries, but not by much, just by a little bit. What does this mean? Well, Tesla's jump today means the stock has notched a 3.5% gain this week, snapping what would have been a 5-week losing streak if not for today's performance. According to Investors Business Daily, a 5th straight weekly loss would have been Tesla's longest losing streak since March 2021. So let's have a quick look at Tesla's performance to see if there's truth to this story. I like to take the long-term view, well, at least a longer-term view than a lot of people do. So if I'm going to invest in something, generally I think it's worth looking at it over a long period of time. So this is not me projecting what Tesla will, where they'll be in 2030. I think they'll be much higher. As high as Kathy Wood says, no, don't know about that, but they'll be much higher. However, 1 year ago, Tesla's stock price was sitting at about $221. Today it's at about $170. So yes, it's definitely dropped from $221 down to $170. What about General Motors? 1 year ago, General Motors was sitting at around $39, $35, between that range, $39 to $35. Today, they're at $33. So if you'd invested in GM 1 year ago, you would have lost less money than if you'd invested in Tesla. Now, if you'd invested in Tesla 5 years ago or GM 5 years ago, well, if you'd invested in GM 5 years ago, you would have lost money if you include inflation, but you would have made a boatload of money if you'd invested in Tesla back then. Some of you did. I know some of you did. Well done. That was a very astute investment. BYD, what have they done over the last year? Well, 1 year ago, BYD's stock price was sitting at $57.16. But that depends. I mean, they had a quick rise after that. They jumped up very quickly to a peak of $82 on the 4th of July, 2022. But 1 year ago, around $60. Today, the price is around $60. If you'd invested in BYD, say exactly 1 year to the day, you would have lost nothing if you hadn't have sold. That is, of course. Now, who has sold BYD? Well, Warren Buffett has sold a lot of BYD. I believe he sold a bit over half his position. Berkshire Hathaway still own BYD stock. 1% of all of Berkshire Hathaway's investments are in BYD, Ford Motor Company. Exactly 1 year ago to the day, Ford was sitting at $14.21, but not long after that, it dropped to $12.50. Today, Ford's stock is sitting at $12 US. Now, recently, Elon Musk praised Ford's EV strategy. They're the only company in the world whose EV strategy he has praised quite publicly, in fact, on Twitter. I made a video about that. If you want to see why I think he's praising Ford's strategy, I'll put a link in the description to that video. Now, what about NIO? Well, 1 year ago, NIO's stock price was sitting at $14.31. Today, it's sitting at $8. I'm surprised it's still that high. Personally, I think that's too high. I believe the likelihood of NIO going bankrupt because they have a CEO who's spending money like crazy and their car sales have barely moved. From relatively small numbers, they're still only selling around 10,000 EVs a month. It's just not enough cars to actually sustain their global ambitions and their global expenditure, which is through the roof. Anyhow, that's NIO. What about Lucid? Well, Lucid's stock price 1 year ago was around $18. Today, it's $7.50. However, if you have a look at Lucid, say, 2 years ago, in November of 2021, Lucid's stock price was $53 US. So I really hope you didn't buy on that day, that's for sure. Now, Lucid's stock price, in my opinion, is still way too high. I can't understand how anyone could possibly justify owning this stock at that price. Maybe if it was about $3, I'd consider it. At that price, I think it's still way too high. The chances of Lucid succeeding in the future, considering the competition, they're still slow to the market. What do I mean slow to the market? Well, they don't have any SUVs. No one really wants to buy expensive, high-priced sedans. They don't. The market for them is minuscule. Have a look at the sales, for example, of Mercedes-Benz's EQS. Very, very low. Same thing with the BMW 7 Series EV. And same thing with the Tesla Model S. They're just not highly demanded vehicles at the moment. Yes, Lucid do have an electric SUV coming, but when? Who knows? We don't know. Xpeng. 1 year ago, Xpeng's price was around $22.50, and they were on track to sell 300,000 EVs that year, and all of a sudden, their sales collapsed. No one really fully understands why. Their cars are good. They're affordably priced, but they're not selling. Unfortunately, a lot of investors have been burned by this investment, myself included. I dumped the stock a little while ago. Not a little while ago, probably about, I believe, 6 months ago. I don't see any future, unfortunately, now for Xpeng. I believe that it's likely they will be bought out by companies such as BYD or Tesla. Someone should buy them because they have some excellent technology. When I say technology, I mean lots of it. In particular, their full self-driving technology, it's not full self-driving, and it's actually very close, very similar to Tesla's. They've been following down the same path as Tesla. You've got to give them some credit for that. They've done extremely well with the software in their cars, and I don't understand why their cars aren't in high demand, but they're not. So I like Xpeng. Do I see a future for them? Well, if I was going to invest in either Lucid or Xpeng, I definitely would pick none of them, but no, I'd pick Xpeng. Out of all these companies, really only one of them, in my opinion, is a future company. I really think Tesla, their work on neural networks is the key to the company. That means robotics, full self-driving, everything. Battery technology, megapacks. But not only that, the software used to make big batteries work. I don't know of any automotive company that has that kind of software other than potentially BYD. I don't know enough about that software with BYD. No one really talks about it. But we know that Tesla has it. It's been confirmed by numerous, even governments have said that Tesla's technology has enabled their grids to function properly. That's significant. Energy will play a big part in the future of the world, big part in the future of Tesla. So will AI. So neural networks are the future. Absolutely. Everyone has confirmed that neural networks are the building blocks of artificial intelligence. And I don't think that having a grid-reliant robotaxi is the future of robotaxis. So at some point in time, most automakers will probably recognize that. I'm surprised that Google hasn't yet with Waymo, considering Google are obviously working on training neural networks as a massive part of their company. That's my key reason. Now, it is up in the air. We don't know for sure that Tesla will ever justify the valuation. They may or may not. There's definitely some risk here involved. But that's a risk that I'm personally willing to take. Let me know your thoughts in the comments. And thank you for watching.